What's going on, players? Canal here, Bulls on Wall Street. Guys, EV stocks have been running rampant the last few days, especially the Chinese ones. You know, you got stocks like NIO that are just breaking out all over the place. The market caps on these things are incredible. And one of the things I want to talk to you guys about today is, like, what do you do when you get a stock that's obviously on your watch list like this, and it just gaps up so big that like you don't really know like where to go with it. So like we were trading this XPEV and a couple of these other EV companies yesterday, and so I want to talk to you a little bit about essentially that first pullback that is the easiest spot to get into. It's like a lot of times if you see like some of these other traders, like they do these gap and go kind of junk like on the 1 minute charts and stuff like that, and that doesn't get you any meat. Like if you ever see it, like it doesn't get you any meat. Like buying the break of a range on a 1 minute chart, or like a break of like a pre-market high on a 1 minute chart, that gets you into a trade that usually will last like a minute or two. What you really, if you want to get like a meaty trade, like when you get a stock that's got like earnings out, so like this is stock we were playing yesterday. When you get a stock that's got earnings out, I did this 3 times yesterday. So imagine, like, you can keep stacking these up. So you get a stock like this, like it had its earnings out, they beat earnings. So you go from 33 to 37. So it's a pretty big gap, right? Like you're at 15, 20% gap. What do you do? Like if you try to buy it too high, right, you get smoked out, especially if you have too much size. So what I like to do is, like, as you pull back, right, the first pullback, it's always the first. The second ones, third ones are usually a little bit more suspect. But as you start to pull back, right, when you start to hold over your EMAs, and I'll usually wait for like a green candle to hold over it, then I'll use that and then manage my risk under, the bottom of the range and the 9 EMA. So like just a very, very simple setup, and that can get you into a trender. And then, later on you can kind of use your other day trading setups to kind of, massage the balls on it. But I use this setup like nonstop on like stocks that have like really big gaps. Like if you see on LI yesterday, it's the very, very similar. Like, don't get too cute with it. Like it doesn't have to come and test it like to the penny and stuff like that. But like you got a nice, easy pullback, right? Green candle to hold. And now you're getting yourself into something that could have like a really, really big run. But the beauty of this type of trade is the risk. Like if you can get it in, like once you get a green candle to hold, and I don't wait for the candle to close all the way, but I usually let it hold for like a couple minutes. These are 5 minute charts, and then I'll snag, under. You can limit your risk on these trades to like say 50 cents or so. Like it doesn't have to be something really crazy, So if you can get yourself in a stock that can move dollars, but you're only going to risk pennies, then that is something that you can reproduce over and over. And that's really what it's about in trading, right? It's like, how can I figure out how to risk 50 cents to make $2? How can I risk 10 cents to make 50 cents? So on and so forth, right? Finding those asymmetric reward to risk scenarios. But if you look here, this is just a very simple setup that you guys can do. Like I did this on this PDD too. Like it didn't go huge and bonk, go crazy. But it's the same thing. Like this thing was at 138, right? Pulled all the way back to 127. Once I got the green candle to hold here, I ripped this thing at like 129. I put a stop right under it. So I had like $1.50 risk, and ends up popping like $5-6. Now I didn't hold this whole way and get like all $5, right? I'm scaling out along the way, but that's going to be how you really want to do these things. It's a very low risk strategy, but a lot of times people get just caught like kind of just trying to buy like buy at the highs and so on and so forth, and it just ends up being like a real kind of cluster. And you don't have to do that. There's a nice easy way to get a low risk entry. So just kind of think about that. And as you get stocks like that are having earnings and stuff every day, or stocks that are like having big gaps, that's going to be a big one. So guys, hopefully that helps. And let me know if you have any questions. As always, I'll keep making these for us, and I'll make sure to put them on the back end every few days. Take care.